The following is a paid presentation by Arnold Zweig of Scotia McLeod. The opinions expressed are provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own financial advisor with questions or concerns.
Dollars and Cents with Ernie Zweig, Director of Wealth Management, Scotia McLeod.
7:06, -7 right now in downtown Montreal. A little bit colder with the wind chill. Thank you so much for joining us. It's Kelly Alexander with you, your host, alongside Ernie Zweig, Senior Wealth Advisor, Director of Wealth Management. So happy to have you again, Ernie. I haven't seen you in like 2 months.
Yeah, it's been a while.
It's been a while, but you look great. You've been swimming, I hear.
Well, yeah, moving. We haven't, I barely float, but it's in the water and it's healthy.
That's all that matters, especially as the holidays approach and we all eat too much. So very good. So I know we've got some amazing things to talk about tonight. We have a couple of guests. Ernie Furt is here. We're going to get to him with regards to lots of tax business.
Right, tax planning, year-end stuff. He's the man.
Important to get to that. And we're also right now joined by a very special guest, Vikas Gautam, who is CEO of Birla Sun Life Asset Management, and he's joining us from Dubai. And so I will let you get going with him right away. I'm very excited to talk to Vikas because it sounds like he's got lots to say as we round out 2017.
Yeah. Vikas, you there? Hello?
Oh, let's see. Let's see if he's... Oh!
We lost
him, so he'll call back from Dubai. What's the time difference? Do you know, Ernie?
It's the middle of the night.
Okay. Maybe he fell asleep.
That's right. His head fell on the receiver and hung up on us.
That's awesome. So I'm sure he'll call us back and we'll get to him right away. So would you like to get going a little bit with Ernie, or what would you like to do?
Or we could juggle, but I don't think that makes for good radio.
Okay, so you tell me where you want to go.
Okay, we'll talk to Ernie.
Ernie, hi, Ernie.
I'm happy to be here.
Thank you so much. Can you actually just lean into your microphone a little
Certainly.
bit? There we go. So Ernie Furt, tax partner, Fuller Landau. And Ernie, where do you want to start with Ernie?
Yeah, so, Ernie's been a tax partner, tax specialist for 20 plus years, and really can help us understand a lot of things that are going on in the news. And number one, that's in the headlines today are certainly the U.S. tax reform. And, a lot of people in Canada have been hearing things about tax reform for quite a while, but the U.S. tax reform is a headline, and I think we should have Ernie comment on that.
Okay, perfect. Ernie?
I think it's quite interesting what they're doing down in the States in terms of reducing the tax rates for corporations down to 21% as opposed to what it was 35% before.
Okay.
So that's quite the change. Mm-hmm. And, as Canadians, we do have investments in the States. Some of the listeners are Americans as well, so that would affect them too. They didn't repeal estate tax like they were talking about, mm-hmm. because before there was an exemption of about $5,450,000, if memory serves, for this year. Now they doubled the exemption to $10 million. So that's a good thing. So you're taxing the ultra rich, and effectively the max rate on that estate tax would be in and around 40%. There's 1,000 pages of legislation, so there's a lot of stuff in here. That's part of those are the key things. Some of the stuff they have pass-through entities in the States, which are like S corporations and sole proprietorships, partnerships, limited liability corporations are pass-throughs. They're going to tax that at a different rate. So that is now, going to a higher rate. That they have different depreciation deductions, incentives to buy assets. So you should wait to buy corporate assets in the States that are depreciables till 18. So just a couple of weeks, and then you can buy those computers or whatever machinery you require to run your business. They're going to limit any loss deductions. Like in Canada, when we have a loss in a corporation, we can deduct that loss against 100% of profit for the next year. So in other words, if our loss exceeds our profit, we can deduct it and pay zero tax on that profit because we're carrying forward a loss. In the U.S., they want to limit that to only 80% of the profit now.
Sorry.
Go ahead.
So, how does that really affect us? It does.
How does it affect us? Because when we're looking to invest, a lot of times we look to invest towards the States. And we may look to different types of entities to invest in. The way it works right now, a Canadian when they want to invest into the U.S., shouldn't invest in an LLC because it doesn't work with the treaty. And there's a lot of LLC investments out there, and the Americans are pushing it because it works for Americans, but it doesn't work for the Canadians. So you shouldn't do that. An S-Corp, that's not something that you can own because an American has to own an S-Corp. Limited partnerships, not a problem, okay? You just get more problems when you have limited liability partnerships, triple LPs, that kind of stuff you shouldn't own. And another vehicle that people use is the C Corporation, which is taxed. That was the one that was taxed at the high rate of 35. Now, when you look at Canada-Quebec rate, corporately, non-small business deduction, basically 26.8% to 37 down there or 35 down there, that's quite the difference. But now when you're looking to 20, you can work with it. 20 plus a state tax, say, of 5 to 7. So the rates are more commensurate with Canadian rates and more commensurate with most of the world's tax rates. So that makes the U.S. more competitive. They're also moving to a territorial tax system whereby they will not tax dividends of foreign corporations owned by U.S. entities as opposed to the way they're doing it now.
Okay, so, a couple of days ago or last week, we in Canada were getting news about our tax reform again.
Our tax reform.
Our tax reform seems to have been going on only for 6 months, but it's been 6 months of irritation.
Well, it's been quite the irritation because of the timing of all of this stuff. The first batch of that stuff came out on July 18th, if memory serves. Now, that's near the holidays for most people, so people got it. People were upset. It's like, really? They're putting this out now? And there was tons of legislation, tons of stuff to look at. No, not too many answers. The whole rationale and genesis of the Canadian tax reform, let's call it, is the fact that they saw a lot of professionals splitting income from corporations with family members, with their wives, with their kids, and sometimes their wives and kids didn't even know where the business was. So really, is that fair? No, that's not fair. But unfortunately, the way they cure their perceived unfairness is they take a hammer to it as opposed to taking a better approach and looking at something a little bit more rationally. So that created the biggest uproar in my tax career. And every professional entity, every accounting firm wrote to Minister Morneau, and they were very distraught, very upset with the way things worked, and they effectively moved backwards. And they decided to change certain things because certain things are really unfair. Or, that income splitting part. They want to make sure that you don't all of a sudden put your child as a shareholder in a corporation and pay him a dividend when he doesn't even know where the place is in order so you can pay for his college education. He'll pay no tax at the end of the day. And that's a great thing if you can do it, but it's not fair.
You're listening to Dollars and Cents right now with Ernie Zweig. My name is Kelly Alexander, and we've been talking to Ernie Furt, who is a tax partner with Fuller Landau, and of course, Ernie Zweig, a senior wealth advisor, director of wealth management at ZetaFinancial.ca is the website. We have much more coming up. We're going to actually speak to Vikas Gautam, who is CEO of Birla Sun Life Asset Management from Dubai. We have him back on the line, so that's all coming up. But right now, it's 7:15. Time to head off to the CJAD Traffic Center, and this is Kira.
You're listening to Money Matters on CJAD 800.
Thank you so much for joining us on the show. It's your host, Kelly Alexander, alongside Ernie Zweig, Senior Wealth Advisor, Director, Wealth Management with Scotia Wealth. And we're very excited to welcome to the program, all the way from Dubai, Vikas Gautam, CEO of Birla Sun Life Asset Management. Vikas, I understand it's like 4 a.m. right now?
Yep.
How's that going?
Yeah, it's pretty good.
See, I guess you really like me for doing this, and I appreciate that.
Yeah, Annie, how are you?
I'm well, thank you. I'm well. So we only have a couple minutes, and I just wanted to touch base on a couple of quick things. So there's a new buzzword in India, and that buzzword is seaplanes, I understand.
Yeah.
So what's the story? When I was there, I saw a lot of gridlock and a lot of construction of roadways, etc. What's with the seaplanes?
Yeah. So, as you would have seen when you were there, all these things, what our country has done and our government has done is effective utilization of all the channels of transport. So, as you are aware that we are a country which has got a lot of rivers and lakes. So, that is the new mode of transport that is being proposed to be used. And as a starting point, it was recently used by our Prime Minister during one of the state election campaigns to travel from one city to another. So you would see a lot more of this in India. And as like the Western world as well as your part of the world, India will also see seaplanes being used as a mode of transport going forward.
Cool. I think it's get some more transportation, moving goods to less populated areas or areas that are more difficult to get trucks to. It's a great
Yes.
idea.
Yep. Yeah.
The other thing, when you were in town last week, we are talking about solar power and how India is actually getting away from coal-fired power stations. Normally, people use coal power because of price points, but solar seems to be kicking in.
Yeah. So if you see over the last 2.5, 3 years, India has put a lot of thrust on alternate energy. And within alternate space, solar is the major thrust in India. And we are leading this initiative across the world. But as of right now, if you see, our almost 95, 96% of our energy is coming to the conventional way. But we have a very ambitious plan that going forward over a period of next 3 to 4 years, solar and other forms of renewable energy would be a biggest contributor towards the overall energy production in the country. And in addition to this, looking at the environment and looking at the cost-efficient way of fuel, India is also moving ahead towards shifting from the conventional petrol and diesel vehicles to electric vehicles. And there is a vision of the government that by 2030, most of the vehicles on the road should be electric.
So when I go back next November, I expect to start seeing some progress. In the last minute or so, I just wanted to touch base on what would happen. There's a lot of fear if the Modi government would not earn a majority next time they go to the electorate. But
Yeah.
you were saying that's not as great a concern.
Yeah. So if you see, they have been in power for about 3.5 years at the central government. And post that, they have seen several states going in for election. And they have been taking charge of most of those states. We recently got results of 2 states on Tuesday. And they won both the states. They are forming the government. This is the first time that the ruling party at the center is controlling the government in the 19 states out of 29 in the country. In past, it was maximum 18 states by one of the earlier governments. But coming back to your point of whether this government is in power or not, that does not change the structural foundation, because what they have done over last 3.5 years successfully is that they have changed the structural foundation of our country. The kind of reforms they have been able to implement over last 24 months is just remarkable on a global footprint, and it has just changed the character of the country. So whether this particular government is there in power or not, but the reforms foundation which has been laid will continue to go. The only thing that it can have an impact is the pace of execution, the pace of implementation could slow down a bit for some time, and that could be a couple of quarters. But apart from that, we don't see any other negative impact growth path.
So it's great to hear that would be irreversible, and I'm going to tell you it's now time to go back to bed.
Yeah.
Thank you so much.
Vikas, thank you so
Thank you.
much, and Merry Christmas early, I hope.
Thank you.
And Happy New
Thank
Year.
you. And same to you all. Thank you and same to you all.
Thank you. Bye.
That is Vikas Gautam, again, CEO of Birla Sun Life Asset Management, and you're listening to Money Matters with Arnie Zweig on CJAD.
This is Money Matters on CJAD 800.
Thank you so much for joining us. It's your host, Kelly Alexander, alongside Arnie Zweig, Senior Wealth Advisor, Director, Wealth Management with Scotia Wealth. And you can find Arnie, by the way, at zffinancial.ca, and his office line is 514-287-3684, 514-287-3684. If you have any questions, Arnie is here until 8 o'clock at 514-790-0800 by phone and 514-800 by text. And we're also very fortunate tonight to be joined by Ernie Furt, who is a tax partner with Fuller Landau, and he's giving us all the lowdown with tax implications. So, Arnie, where are we going now with Ernie?
So, Ernie, I received an email. It could be a case study for a tax planning course. It's a young professional and moved out of the parents' house and into their own home with a partner, and has a bunch of questions. So, question number one is, what's the definition of common law, and when do you have to declare yourself as an individual versus as a couple?
Well, if you're living in a conjugal relationship for at least 12 months, or one person is the parent of the child by birth or something like that, you're a common law. So 1 year, effectively, if you're living together more than 1 year in a conjugal relationship, you're common law. Now, you look at that and say, well, if I write down common law on my tax return, how does it help me, or does it help me? And in Quebec, it really doesn't help you, because there's a lot of credits, like medical, that's aggregated by couple.
Okay.
So in Quebec, there's no net income limitation threshold on medical, so they add the two net incomes of the couple together, and then they take their 3% of net income. So it kind of penalizes you there. On the federal side, they take the lower of the two, and they limit that in that regard. So it is a bit of an advantage there. And there's a couple more credits that are also income driven by the couple. Another interesting thing that could happen is, God forbid, you're in a common law relationship and you haven't put it on your tax return. You've been doing it for 25 years, and one of the spouses dies. Okay. How are you going to get the QPP death benefit that's payable to a spouse or a common law partner? Your income tax return doesn't indicate that. You're going to have to sit back, amend a whole bunch of income tax returns, and speak to the RRQ in order to get this benefit. So think about this.
Okay, and at what point is it beneficial to separate yourself from your parents as a tax planning?
When you're no longer dependent. You're not filing on their tax return. You're filing your own tax return. You have a summer job. You have your own tax return. You may have some tuition that you could transfer to your parents, or not necessarily, because you can carry forward tuition too. And if you're already in your first year of work, you're not much of a dependent to your parents. You could still be living at home, but your parents are not getting any benefit, really, of you being there.
Okay, and if you live most of the year at your parents' house, and then towards the end of the year you move out, at what point are you able to deduct everything as yourself?
Well, you'll deduct everything yourself anyways, but you're going to give the address to the government. As soon as you move out of the house or change addresses, you should contact Revenue Quebec, Revenue Canada, or CRA, and give them your new addresses so they can send you stuff and send you bills if in the event that and notices of assessment and good things like that. And you'll be filing a tax return using that new address, but the tax return essentially will be the same.
I seem to recall in the years gone by, I don't know if it's still, but the question is, what is your address on December 31st?
Well, usually the address on December 31st determines residency. So consequently, I could be living in Quebec for the entire year, decide that I want to move to Alberta, and I actually physically move to Alberta in December. I am going to pay taxes as an Alberta resident at the end of the year. So all my Quebec tax deductions, I'm not going to get. I have paid my Quebec tax. I take that Quebec tax, I aggregate it with my federal tax, and I pay Alberta tax, which is a little bit lower. That rate has been creeping up over the past few years, but people have done that. But you actually have to physically move.
A lot of people take home buyer's plan deduction out of their RSP so that they can help pay their down payment.
Well, that's a very interesting thing to do, because if you're a couple, you each can take up to 25 grand from your RSP, assuming it's there.
Sorry, they don't have to be a common law couple. They can just be two individuals.
That I'm not sure about. Okay, I haven't checked that, but for a common law couple, for example, you can each take, or a married couple, you can each take $25,000 from your RSP and put it as a down payment together with anything else that you have, and that's repaid over 15 years.
And the idea is to actually repay it.
Well, you want to replenish your RSP, and that's the way of doing it. You know, you could alternatively, if you don't replenish your RSP, that 1/15 of that amount that you take is added to your income every year.
So the only person that wouldn't repay it to continue to have the tax advantage growth or tax deferred growth would be somebody who has virtually no taxable income in
Correct.
a particular year.
Correct. You know, all of a sudden you lose your job, and then you can take in more than 1/15 if you so decide. You know, you're working with your tax professional. Your tax professional says, "Hey, you had no income this year. You know, we can take in some RSP at a very low rate," which is a good idea.
Okay. And for the first-time home buyer, is there specific credits?
There's a nice credit, you know, for federal only, which is $5,000 if memory serves, and that $5,000 is not a deduction of $5,000. It's not a gift to you of $5,000. It's a credit, which is 5,000 times the credit rate, which is 15%.
So that means you're really saving $450 or getting a refund.
Yeah, more or less.
Okay. And tuition credits.
Tuition credits are there. They're changing this year. Quebec changed a few years back.
This year being 17 or
17.
18?
17,
Okay.
pardon. We're still in this year, aren't we?
Right,
Okay.
right. You're right. Sorry.
I'm so sorry.
I'm so anxious to get into next year.
Because the tuition credit, you're getting that tuition credit, whatever you pay for tuition, whether it be here or whether it be in the States. And before you used to get education amounts and amounts for books on top of that. That they're turfing. It's gone this year. So your credit now, because I have a son in university right now, you're looking at about $2,400 a semester, more or less. If you're here in Quebec, other places are higher. There's special forms if you happen to be in the States. So you need another type of tuition form. There your tuition is a lot higher, and you could deduct that, and you can transfer some to your parent too if you can.
Much more coming up with both Arnie and Ernie. You guys should have like
it's
a
the
duet.
Arnie and Ernie show.
It's true. It's true. You should
Cue
get matching
music.
badges and T-shirts. So much more coming up with both Arnie and Ernie. If you have any questions, again, they're both here until 8 o'clock at 514-790-0800 by phone and 514-800 by text. We'd love your first name in the text. And again, don't forget, if you'd like to reach out to Arnie Zweig, again, Senior Wealth Advisor, Director, Wealth Management with Scotia Wealth, you can do so on his website, zffinancial.ca. And of course, his office number is 514-287-3684. My name is Kelly Alexander. We're coming up on 7:45. So let's see how the roads are doing on a Wednesday night here in Montreal. Let's head off to the CJAD Traffic Center and Kira Yeager.
This is Money Matters on CJAD 800.
7:49, -8 right now in downtown Montreal. A little bit worse with the wind chill, -15. It's your host, Kelly Alexander, alongside Arnie Zweig, Senior Wealth Advisor, Director, Wealth Management with Scotia Wealth. And you can reach out to Arnie, by the way, at his office, 514-287-3684. The website, zffinancial.ca. And our special guest this soir is Ernie Furt, tax partner with Fuller Landau. Arnie, where are we going with Ernie?
Oh, We have one more question for the new home buyer.
Sure.
A tax credit from Quebec on renovations. Isn't there something out there?
There's definitely something out there. This is a very interesting credit, but you have to have eco-friendly renovations. They have to be, the contract has to be entered into before April 1st, 2018, and it has to be paid by January 1st, 2019. The maximum amount of the credit is $10,000, and that's actually a credit. That's $10,000 in money.
Real money.
Real money, but it takes $52,500 of renovations to get there.
Okay.
It's at a 20% rate, and the first $2,500 you don't get a credit on. So they're talking about serious renovations. The contractor who you use has to be registered for GST, QST. He has to be RBQ certified, Régie des Bâtiments de Québec. And some of the expenses, there's a lot of details on the Quebec website, but some of the good stuff that people commonly do, because people aren't going to install green roofs and white roofs, because I don't even know what that is. I do, but in reality, most people don't. But they do know what insulation is. They insulate the roof, their exterior walls, that exposed floors, that kind of stuff counts. To redo their doors and windows with Energy Star doors and windows. Normal people do that all the time. A furnace qualifies. A new furnace. People need it. It's getting cold. We need a furnace. Mm-hmm. And in the summer, what do we need?
AC.
AC qualifies also. So you have to just make sure that it qualifies. Take a look at it. Speak to your contractor. And the contractor, if they're a good contractor, they'll tell you exactly what qualifies.
Now let's move on. We've got a few minutes and a week and a half until the year-end date comes, December 31st.
So, my God, what should we do between now and the year-end?
So what you should do is plan January 2nd to plan for 2018 properly and not panic in the last week.
It's not a question of panicking. You know, people are organized to a great extent. There's certain things that they can do. They have to talk to somebody like you and take a look at their portfolio, see how much capital gains they realized during the year, and maybe they want to sell off some losers. So, so get a capital loss against it and don't pay the tax on the capital gain. Those things have to be sold by December 27th, if I am correct?
It used to be mismatched between Canada and the U.S.,
and
but now it's matched because of settlement date changes.
Exactly. Just watch the buybacks of those stocks, and you don't do it within 30 days. If you're going to buy those losers back, sometimes you want to buy those losers back, sometimes you don't. If you're going to withdraw, if you need money for Christmas, don't take it out of your RRSP right now. Hopefully you have a TFSA and you could take the money out of the TFSA, because January 1st, if you take it out of the TFSA, that room refreshes. If you take your money out of your RRSP, you're going to pay tax on it. So if you need to take money out of your RRSP, take it out in January, not now. Okay?
So you defer the tax the next
year. So you defer the tax the next
months.
year. Pay your investment expenses now. Make your donations, charitable donations of shares, whatever you want to do. If you can get an appointment with your dentist in this last week, or if you need glasses and you can get them this week, do it. Because those are deductible medical expenses. Pay your alimony. If you have shareholder loans in the corporation, pay them by December 31st or the year end of the corporation. Purchase business assets. Canada, it's okay to purchase business assets. If I purchase a new computer now and my year end is December 31st, say, a lot of corporations have December year ends, then I can depreciate it.
So for a week, you end up getting a year's worth of depreciation.
Bingo, half a year actually. For most cases, it's a half year rule. And there's other things that businesses normally do at this time of year. The old fashioned Christmas bonus. Okay, if you're going to do a Christmas bonus, you can get an exemption of up to $500 in a Christmas bonus. However, it has to be in stuff. It cannot be in cash. So you have to go buy that really, really big turkey or that or other gifts. You want to buy one of your employees a television set that cost $450? No problem.
But you can't give $450.
But you can't give $450, nor can you give a gift card for $450 to go buy your own TV. That'll work for Quebec, but it won't work for federal. So don't be lazy. Go out and buy that TV for your employee.
And make sure they have a good exchange policy.
Let's not talk about that kind of stuff.
We actually had a text come in, guys, to 51400 saying, does geothermal heating count? Do you know if that works, Ernie?
I am not sure, but the Quebec website will answer that question. All you have to do is type in Renovert credit,
Okay.
RENOVERT credit, and it'll give you all the details on the credit and what qualifies. There's a massive list of things.
Okay, perfect. Arnie, you've got like a minute and a bit. What do you want to end off with?
How about organizing for next year? Or, it doesn't take much to organize to keep your files in order, to keep your receipts in order. Ernie, do you have any quick pointers? Or are people still showing up with shoe boxes of paper?
Well, people show up with
besides
shoe boxes.
Kelly.
People show up with shoe boxes. We weigh those shoe boxes and determine, we charge by the pound.
Sort of like en vrac.
That's right. That's right. A lot of receipts come in by email. So we're not necessarily as organized as we would have been before. When we had that shoebox aside saying tax stuff for accountant, we'd shove everything in that box. We didn't open an envelope. People put stuff in there, inclusive of checks that they didn't open up, and I've seen that, trust me. But now we get stuff by email. So have little folders for your medical expenses in your computer, and shove all those virtual receipts there.
Smart.
One for donations, one for medical, tuition receipts, RSPs, whatever it is, just get them there.
Perfect.
And on that, I think we'll just wish our listeners a Merry Christmas, a happy, healthy, and prosperous New Year.
Yes. Same to you. Ernie, thank you so much for joining us tonight.
It was a pleasure.
Always happy to have you in here. That's Ernie Furt, again, tax partner with Fuller Landau. And Arnie, be safe in Costa Rica, please.
I promise.
Don't forget to come back.
I promise.
Because we got you first or second week, I believe, back in January.
That's right. We're going to spend some time together in January.
Perfect. So if you'd like to reach out to Arnie, not at Christmas, but he's there for the next couple of days. Arnie Zweig, Senior Wealth Advisor, Director Wealth Management with Scotia Wealth. His website, zffinancial.ca. That is zffinancial.ca, and his office number is 514-287-3684, 514-287-3684. My thanks to Dave Simon for pushing all the right buttons. My name is Kelly Alexander, and coming up after the news, it's The Night Side with John Pohl on CJAD.
The preceding is a paid presentation by Arnold Zweig of Scotia McLeod. The opinions expressed are provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own financial advisor with questions or concerns.